about exports. You've just spoken about it and would like to go more into it simply because of the headlines that we're seeing coming in from Europe. The soft landing, hard landing, the winter's perhaps going to be a tough one with energy as well. How is all of this going to impact Cummins?
The geopolitical situation still is quite unstable, but we expect the demand going forward to be pretty stable. There are many segments and many new products that we have launched, so we think the momentum can be maintained. So we remain cautiously optimistic about the future as far as power generation is concerned.
You've achieved highest ever quarterly revenue, sir, and profits across geographies. Is it safe to then say that the supply chain issues are now behind us and that this kind of a run rate will continue?
So supply chain continues to be a struggle. If in the previous quarter we could not supply 10 or 15% of the demand that we had, now we could not supply a little less, maybe 10%, 5 to 10% of the demand that we have. So the situation has improved a little bit, but to say that the problems have just gone away, that situation is not true. We continue to work under a constrained supply situation. We are being allocated parts, especially in the electronics area. We continue to struggle to get all the parts that we want to produce the number of products that we need. So demand leads supply even now for some of our products, especially in the domestic market.
Right. Mr. Ram, do you see upcoming emissions norms, as soon as we see, the July 23 figures, that is, as an opportunity for Cummins India? However, local competition has always risen to the occasion around these. Could it keep the sector level returns, OPMs, under check, you think?
Yeah, so anytime emission norms get tightened is usually great for Cummins, mainly because we have the leading product technologies. We have already tested and tried them in multiple markets. We are ahead of the curve as far as development is concerned, and it takes some time for others to catch up. And the leap from going from CPCB2 to CPCB4 is very, very significant. With this change, it becomes one of the most stringent norms in the world as far as emissions is concerned. And so we expect to be able to improve our position in different market segments.
Mr. Ram, morning. Now, the company has said that demand remains strong across all the end user segments, be it manufacturing, data center, pharma, etc. So are you seeing an all-round recovery in the overall Capex?
I believe so. I believe that the infrastructure push that India is making is leading to demand within the country, of course. And the last 2 years before this have still been slow for Capex because of all the COVID slowdowns and the uncertainties around the world. So there is pent-up demand for Capex to catch up to some of the infrastructure growth and to make up for the spending that has not happened in the last couple of years.
Okay, now given that you've seen a margin improvement sequentially as well, can you talk about the leverage benefits and the mix of high margin products now versus what it was earlier?
Well, margins are better because of multiple things. Of course, exports is higher and we get better realization out of exports. The second is the mix in our portfolio. We are selling a better mix of high horsepower products versus low horsepower products. We continue to have gains in cost management and cost control. And fourth is we have started to see a little bit of commodity softening. While we have not seen the full impact of commodity softening, we have seen some parts of commodity softening, and we are starting to see the positive effect of some of the price increases we have done in the recent past. So combination of all of this and better utilization is what is yielding better margins.
Can you talk to us about what the price action is likely to be going forward, given the softness in input costs?
So we have taken price actions in the early part of in the middle of this year, and we have announced another price increase early next year. So with the combination of those two price increases, we should be offsetting all the commodity gains that have impacted us in the past.
Now, the parent of Cummins has raised the guidance, and that's on the back of strong power generation. Can you talk to us a little bit about the near-term guidance for the India entity? Will we see a guidance going up?
So we are not yet providing guidance this year. There is still a lot of uncertainty, both from supply chain as well as some of the geopolitical environments. But we should be getting ready to provide some guidance moving on from next quarter onwards. But as of now, I can say I'm cautiously optimistic. So the very fact that Cummins Inc. has also indicated a positive outlook, I mean, that tells us that global trends will continue to be good, with domestic being decent and exports being decent. We also expect to, do as well, if not better than the previous quarter.
So lastly, what are the benefits that you see coming in from reducing China sourcing? And if you got any benefit from, de-risking from China?
So the India business has been in existence for 60 years. As a matter of fact, we are celebrating our 60th anniversary this year. And we have always had a high level of localization in India. So our imports from China are pretty small. We are starting to see some positive impact as countries try to de-risk the global supply chain. So if there were only one supplier in China, they're trying to set up a backup supplier in India. If there was only one supplier in India, the same is happening, that they are looking to set up backup suppliers in China, Vietnam, Mexico, and other countries. So there is a de-risking of the entire supply chain happening. Certainly, since China is a greater producer of goods than India, when that balancing happens, we are likely to gain somewhat in those transactions.
Thank you so much, Mr. Ram, for taking time out and joining in. Those are some of the key takeaways from Cummins India, talking about how the export margins have really aided the overall margin picture. The commodity prices softening as well is a positive. And as of now, due to uncertainties, they aren't providing any sort of a guidance. Cummins India currently at about 13.55. What's going on?